Hello, I'm Mike Graham, and I am the host of the Banking on Growth podcast, as well as the president and co-founder of Midwestern Securities. To our listeners, thank you for being with us for this episode. To our guest, Dan Gilmartin, welcome. Thank you for being with us. I enjoyed our conversation a month and a half or so ago in Boston, and I hope we can dig into some of that in our time together. But first, would you introduce yourself and Catchlight to our audience?
Sure. Well, thank you, Mike, for having me. That was a wonderful conversation we had about a month and a half ago, and look forward to jumping in further with you and sharing some of that conversation perhaps with the audience. So as you said, my name is Dan Gilmartin. I'm the head of marketing for a company called Catchlight. We are born and live today within Fidelity Labs. Fidelity Labs is an incubator within Fidelity Investments, and the focus is to build net new businesses, ideally focused on the wealth sector. A little bit of my background, and I'll talk a little bit about Catchlight in just a moment, but I've been in the SaaS or software as a service technology space for the bulk of my career, mainly focused in business to business products. And those products are really, for whatever reason, thematically, I guess, focused on helping businesses grow. A key theme of what I like to do in my work. I've worked across a couple different technology stacks, financial technology, advertising technology, as well as marketing technology. About 4 years ago, I got a call from a good friend of mine who was here at Fidelity Labs working on a project that would ultimately become Catchlight. And he got to tell me a little bit about it, and I got to meet some of the team, and I could just see the connection of the ability to leverage data and AI to help accelerate growth for financial service firms, wealth management firms. And so I jumped in. I've been here for a little over 3.5 years. And so maybe just a little bit about Catchlight. So we are an organic growth platform. We leverage AI and to produce unique insights for wealth management firms on their prospects as well as their customers to give them a better understanding of who and how to prioritize their business development efforts. We score leads based on a unique model that looks at unique attributes of any given individual to predict the likelihood that somebody might convert to paid advice. We focus on top of the funnel work, who should I call first? What should I say? As well as the bottom of the funnel, what's my share of wallet? Another use case that we're starting to see and get a lot of attention, and was part of the conversation that we had a month and a half ago, is cross-selling. So we're working with a number of firms to help them identify clients of one product within their portfolio who might be a great client for another product or service. The example that we happened to talk about was individuals in the retail banking side of things, and how we might help firms identify who of those customers would be ideal wealth management clients. So that's a little bit about me and a little bit about what we do here at Catchlight.
Yeah, thank you, Dan. I appreciate it. And to our listeners, many of them know that Midwestern Securities and Fidelity have a great long-term symbiotic relationship. If our advisors in our community financial institutions do better, Midwestern Securities does better. If we do better, Fidelity does better. So it makes sense that Fidelity invests in something like Catchlight to help everybody down chain do better and differentiate. Will you share a little bit about the data pool that you guys are gathering the data from that makes your AI smarter?
Sure. Well, I can't give names, but we aggregate data from a number of different sources. We spent a lot of time early on in the development of our platform looking at many different sources. And what we have found is that some providers are really good at certain data points. Other providers are really good at other data points. So it's been our mission to aggregate that data. And when we talk about data and we talk about how we're assisting our clients, ultimately what we do is we take with very little information, first name, last name, email address, some type of contact information, email, phone number, or street address. We build a comprehensive profile on any given individual. Now, when we initially launched, we had things like assets and income, typical things that a wealth management firm would want to know in terms of how they might prioritize that group of prospects that they have. And what we found is that we needed to do more work on those assets and income. And we ended up creating our own models to estimate assets and income on a given individual. And we're pretty proud of the work that we've done there, so that when that firm is acquiring leads, either from whatever channel they may be, they could be, like we talked about, retail banking. They could be acquired through their website, doing seminars, things like that. We feel really confident in the data that we're able to put in front of the firm so they can better prioritize that outreach. But again, the data comes from lots of different sources. The trick is knowing what part of those sources are really good, understanding what parts may not be as good, and then where you can apply data science and AI to create a better picture, a deeper picture, more accurate picture of that individual. And one of the things that we did do, we created our own model, not only on investable assets and income, but we also created something we call the Catchlight score. Now, the Catchlight score, Mike, as you may remember, is a tool that looks at the unique characteristics of any given individual and compares that to a group of other individuals that we know raised their hand and had expressed interest in paid advice. And so we can compare the attributes across the prospect group to that known group, and then have a prediction on who we think most looks like those individuals that raise their hand, and think that that's one of the best ways that firms can prioritize who they're going to reach out to.
So it sounds really simple. There's just 3 data points, and none of them are PII. Right? No address, a email address, or a phone number. We're not talking about socials or date of birth or anything like that. Nothing more personal. And in practice, a community bank, one of our clients, could pull a list of their customers who they want Catchlight to kind of scrub to see if they can create a profile of their top 500 clients that are most likely to have larger amounts of investable assets and a willingness to pay for advice. Is that right?
Yeah, sort of across the spectrum of the firms that we work with, we've got folks that have anywhere from 5,000 names in a database of prospects to 50,000 customers on product X, all the way up to a million names in a data file somewhere. Our strength is helping them identify within that group who we think they should prioritize in terms of outreach, based on the modeling that we built that looks at propensity to pay for financial advice. So it does sound simple when we talk about it in those terms, Mike, but there's a lot of science,
Sure.
There's a lot of data science behind that.
Yeah. Well, that's genius if you can make it simple for your clients.
We
And,
try.
It's
We
simple,
try.
simple for the bankers and the financial advisors, and they don't need to see all the complexity. Your job is to make that complexity go away and give them usable output, right?
Right. Well, and it's not just the advisors and the bankers. It's the organization within those companies that are really focused on growth. It's the chief marketing officer. It's the chief growth officer. We tend to find that those are the individuals who have a number that they've got to hit. They're trying to figure out, how am I going to add assets to my firm? And so those are the folks that are starting to aggregate all this data across their entire firm, whether it's from spreadsheets over here and Post-it notes over there and lists that they've acquired over the years and CRM and things like that. Those are the folks that we find are faced with this challenge of, I've got all this data and I know there's some real opportunities in this data. I just don't know which ones.
Mm-hmm. Absolutely. Narrows it down and gives them focus to build their marketing and their sales campaigns targeting those people.
Yeah. Ultimately, I'll just add that it's not just about assets and income. It's not just about a Catchlight score. I think those are powerful tools to drive that segmentation way at the top of the funnel. But we also include in the profile that we deliver things like educational background, employment background, personal interests and hobbies. We seek to help firms better understand who the individual is so they can really hyper-personalize that outreach at scale. So that you're not, I have a guy on my team who's a early 30s, just became a dad about 9 months ago. And we sort of joke about him getting all of these email solicitations about being ready to retire. He's like, these people don't know who I am. How am I going to trust this email? How am I going to trust what they're trying to sell to me? They should be talking to me about 529s.
Right. Absolutely. That's good. So we work with our bank partners and our reps building personas and then building marketing campaigns or sales campaigns to those personas. So exactly what you said doesn't happen. The 30-year-old new dad doesn't get a retirement income invite to a seminar. They know when they get something from us, it's meaningful and relevant to them and not junk mail, not easily dismissed.
Right.
Yeah.
Relevancy is the key there, Mike. You hit the nail on the head.
Yeah, that's good. So we've been talking with our community bank partners about subscribing to Catchlight and starting to implement this. And we've got a bank that's ready to go. We've got another bank right behind it that I talked to yesterday about this that we're trying to get in the queue and start having conversations with you guys. And then we'll, at Midwestern Securities, we're going to build some success stories. We're going to build success stories of our community bank partners and financial and credit unions as well that we work with that have adopted this and have looked at it as a way to be more successful, quicker, more economically. So they might decide that in 2026, they're going to spend $20,000 on seminar marketing. Well, maybe we redirect that $20,000 to seminar marketing to scrubbing data with Catchlight and then building more personalized approaches to build relationships with these customers. So how can we, back to the adage of shoot with a rifle, not with a shotgun type of approach for marketing and look for those ideal clients who have multiple complicated financial needs that the financial institution can solve for safety and liquidity, borrowing needs, investments, all of those things that not just a product. We never lead with a product and we never lead with a widget. We want to bring them in and understand them holistically and then bring the right people in the room, get the loan officer, get the CPA, get the trust officer, get the estate planning attorney, get all of them in the room and basically try to get the whole wallet share, the whole wallet share of financial needs taken care of right here with our team and our community financial institution. We're excited about this. We're talking with our clients about it. One of the first questions we get from the bank president is, well, I'll have to see if my privacy policy allows for this sharing. What are your comments to that question?
Well, first, before we get into that, I just want to thank you, Mike, for sharing the Catchlight story with your clients. We deeply appreciate that, your trust and confidence in who we are and what we do. So first that. Secondly, from a privacy perspective, number one, the data that we aggregate is all first-party opt-in data available from public sources. So we are not out there scraping and doing surreptitious things like that to build individual and user profiles. People look to us as an aggregated data supplier with insights that are deeper and more accurate than what they could find elsewhere. And ultimately, from a privacy perspective, this is up to the firm to ensure that where and how they're acquiring access to contact information for an individual, that they've opted into being able to leverage products like Catchlight. So that's what I would say to the CEO. And we, like I said, we are part of Fidelity. We live in Fidelity's labs environment, and we're held to a very high standard when it comes to privacy and security and all the things that come along with that.
Thank you. Do you have any success stories of financial advisors or banks that have used this and you can show the results followed?
Sure. I can't give names,
Sure.
but I can talk about a couple areas of improvement in the client acquisition workflows. So number one, we did a study 2 years ago when we found that the average advisor was spending about 6 hours per week researching leads. And Mike, you can only imagine what they're doing. They're going to LinkedIn, they're going to Facebook, and they're doing
Right.
Google searches. And so, putting their leads into our system, they could have that data returned within seconds. We integrate with major CRMs. We've got a web interface application, so they can very quickly get access to that data within the environment that they seek to work on a daily basis. So number one, I'd say, is the time savings that we're able to deliver. Number two, knowing more, and maybe I'll give you a couple of use cases. We've got a number of folks that do in-person seminars, and this isn't an invented by us idea. This is from our customers. But what they've done is they'll take their registration list for a seminar in person, run it through Catchlight, and then get a sense of who's going to be in the room. And they'll start to think about seating charts, if you will. Who do they want to sit together? Who might have common interests? Maybe who went to the same school, who works in the same field, who may have the same investment objectives. So they're doing things like that to improve the likelihood that somebody's going to have a positive experience when they come into that seminar. And from purely a numbers perspective, we see the likelihood conversion. If you look at the Catchlight score, sub 50 or 50 and above on that scale of 0 to 100, typically we're going to find 2 to 3x increase in conversion with folks that have a higher Catchlight score than a lower Catchlight score. So, I can't get into the specific details of firms and the specific results they're seeing, but these are the general metrics that we look at to ensure that we're driving both efficiency and effectiveness of our data within their workflows.
A little bit more effort on the front end to make sure that there's significantly larger results on the back end.
Yeah, if you think about it, I mean, just from a math perspective, if you have 100 leads and you're going to try and call all of them, you're going to have a Y result. If we can take that 100 leads or whatever that number is, run them through Catchlight, and then start to segment these folks. From you talked about persona, from a persona or a need perspective. How do these folks fit with the target audience of the firm? How do they align with the types of services that the firm offers? And are there ways within that data set to find people and simply pull them out? They are not our ICP. They may look for a product that we don't offer. So maybe we're going to put them on the side. And then those that still fit within that criteria, does the firm have minimums? We hear that from a lot of our customers. We have a minimum. Whether it's 500,000, 250, $1 million, again, we have estimated investable assets. So we can start to do a lot of filtering on that list. And so the idea is to take that list of 100 and who do you want to cull out? And maybe those folks, if they could be good prospects, but they're not good prospects right now, maybe they go over to the marketing department to go into a nurture campaign. Start to build the brand, start to build the relationship with that individual digitally. But then you can come in, and, I don't know, maybe it's 50%, maybe you're whittling it down to top 20 of that original 100. But then you can focus your time and effort really deeply on that 20, because we've helped filter to those that we think are most likely to convert for that firm. You may have the same conversion rate, or same number of folks that convert, but your denominator is 20 versus 100. So your effective conversion rate would go up. The amount of time and effort you're going to put into that business development activity would go down. And so that's the theory behind how we seek to help firms really focus on who they're going after, put other people into different types of campaigns, but save that time and effort and really apply it with deep insights on each one of those 20 people to have the best conversation that you can have.
I don't really like the phrase professionalizes because I think it means, polish over effectiveness sometimes. But this does really, I need to think about this and come up with a better word, but it professionalizes some of that research on the front end of the person just scrolling through social media, acting like they're really being effective about gathering leads. They'd be probably more effective in a real life environment at a Chamber of Commerce business after hours than scrolling through people that went to knew somebody who you went to college with on LinkedIn, I'm guessing. More serious, more professional effort to identify who you should be speaking with and who you should be trying to turn into those ideal clients. Let's talk about this from an ROI perspective a little bit. Let's say an advisor in a community bank gathers $20 million a year organically, and they have for the last 5 years. And we say they hire, they subscribe to Catchlight, and now their new assets under management grows to 25 million instead of 20. Right? They pick up an extra $5 million. The fee-based client, and let's just say their 1% is hitting their grid. That's another $50,000 a year. Mm-hmm. Now they don't make all of that 50, right? They have to split it with their bank and the broker dealer, and there's cost of doing business, the SMA or the clearing firm, et cetera, too. But let's say they make 40% of that. So they've got $20,000 in extra annual income. And they keep that customer for 20 years.
Yeah.
And I'm not a professional marketer, but that seems like pretty good ROI for the lifetime value of that customer.
Mike, I scratch my head sometimes because, the simple math, I mean, you went deeper, but my simple math would be $1 million client at 1% is $10,000 a year times 20 years. So that's $200,000. And, I look at that as the lifetime value of that customer. It's not quite NPV, but maybe it's somewhere in the 120 to 200 range, something like that. And I look at data. I'm a marketer. That's what I do. It's sort of, and I'm data driven. So and I'm relatively new to this space. I've been in sort of the wealth tech space now for 3.5 years, in joining the Catchlight team. But I look at from my business perspective, I look at cost to acquire, and a metric that's sort of synonymous with SaaS businesses is LTV to CAC ratio. What's my lifetime value to my customer acquisition cost ratio? And you want to be at a minimum a 3. If you can be a 5, if you can be an 8, 10, that's phenomenal. And then when I study data on what firms are doing to acquire, or what their spend is, their CAC, customer acquisition cost, it could be $10,000. And so I look at that spread, which is what you're poking at, between that $10,000 cost to acquire. I've seen numbers from 3,000 upwards of 10,000, relative to the NPV. And that's where I scratch my head and I say, well, why aren't they accelerating? Why aren't they doing more? Why aren't they spending on different tools that make this process really efficient, but able to grow that top line? And part of me, I sometimes think that they're probably spending a lot of time in busy work, and do they have enough time to just focus on that business development exercise? And it's sort of this contradiction of, I need more time to do that, but I've loaded up with these tasks that are super time consuming. So the ROI on these types of services, certainly Catchlight is, to me, it's very, very clear, given the potential revenue upside of bringing in just one customer.
I agree completely. And from the Boston visit that one of Midwestern Securities' biggest strengths is rep training and mentoring, and putting these things into practice and striving for excellence, not just going through the motions. And we all know many financial institutions not affiliated with Midwestern Securities who they have order takers. They have people who just sit there and go through the motion. Every firm has, seemingly every big firm has that sort of employee or department somewhere in there. We, as a small broker dealer in RIA, there's no room to hide. We expect high performers, and we expect people who have high expectations of themselves. And that is, they want to use their time the best, the most effective use of their time, and they want to use their money as effectively as possible. Using their time less effectively is scrolling LinkedIn or Facebook, or going to the business after hours to drink Bud Light with their friends, right? That's an ineffective use of time. You may feel like you're doing something productive, but you're really not, unless you happen to get lucky and the right deal lands in your lap. That's shooting with the shotgun with marketing too. You spend the money on this advertising campaign and hope the right people call in, and you're there when they call in. So we're very intent on intentional activity, intentional campaigns, intentional language with our clients, the sales process, intentional follow-ups. And I think that this ties in really well. Advisors need to, and bank leadership needs to invest in themselves. They need to continue to grow. I'm in the room with other bank leaders from time to time. They're like, where did you hear this? How did you learn this? Well, reading, studying, observing, podcasts, listening to things, this discussion like we're having today. Success, above average success over an extended period of time doesn't happen randomly. It happens with hard work, study, and intentionality, and investment of time and investment of money. Same thought continued is advisors, loan officers, bank presidents need to invest in their growth. They need to write a check for things like this. If they want to do things better, bigger, more profitably in the future, we have to do things differently in the future. And I'm a believer that things like Catchlight are part of that, and part of that spend and part of that mental resource. There should be a good ROI if we do it, and we do it thoroughly enough, and we do it frequently enough, and we don't expect that we're going to hit it right away. With a campaign that we commit to over a year or more. But I think sometimes I hear financial advisors, or I hear financial institution leadership saying, should I spend $400 joining the Chamber of Commerce? Okay.
Yeah.
If we have to ask that, we really need to examine a couple of things.
Yeah.
And I think looking at what you're talking about, and data mining isn't a thorough enough explanation of it, but that's part of that's part of the present, and it's part of the future for being smarter marketers and business developers.
Yeah. I would just add, Mike, one of the things that you talked about here in Boston when we had that broader meeting is process. And I was really struck by how you've organized a process that is really disciplined, but it's very, very intentional. And when you started it, and forgive me, but it probably even today isn't the perfect process. But I think that's the point, is that you started something, you started testing, you started gathering data, you looked at the data. Okay, here's what we did, here's the result. How can I be intentional about improving this step of the process, or this script that somebody is going to leverage when they're making a phone call, or this type of event? Am I going to go, as you said, to the pub after hours and just have a couple pints with my friends, or am I going to be intentional and go to this Chamber of Commerce meeting or other types of things? The intentionality and definition of process. I was really struck by how specific you were in how you put that together. And, we see that with our firms that some are super intentional, some are not. But if you can be intentional, and set expectations correctly, start to leverage data, start to leverage different tools, you're going to start to see some interesting, and they may early on just be incremental lift, but those incremental lifts become I think, a real game changer for businesses as what I like to say, and I heard this from one of the guests on my podcast, is institutionalizing growth within the firm. And that's taking all the insight. It's taking all the software tools, if it's Catchlight, the data, but ultimately putting it through a process. And I thought you did a great job of explaining how you support that process and how you drive that process. Because without process, great data, great tools, it just sort of falls apart.
Absolutely. We completely agree. One of our mutual friends has the phrase, by design or by default. And by default can work every now and then, but by design works consistently and works consistently well. It's back through Jim Collins, Good to Great, said companies, I think it was Jim who said, companies don't rise to the level of their talent, they fall to the level of their systems.
Yeah. Yeah. By default is no strategy.
Right. Yeah. Well, this has been awesome, Dan. I really enjoyed reconnecting and learning more and kind of refreshing on Catchlight. And I'm excited for our audience to learn more about Catchlight. What's the best way for them to stay in contact with you, to learn more about you and learn more about Catchlight?
Sure. Simply go to catchlight.ai. We're there. Find us on LinkedIn. We've got our own podcast, and Mike, I'd be thrilled if you can join me on that at some point. We just closed out season 2, but we're going to start up season 3 in about a month or so. But in that podcast, we do the same that you just did. We bring in guests, and ultimately we seek to share, to inform, to educate our firms. I think of us less as a vendor, more as a partner in growth. We happen to have really, really great data, but we've got an awesome team who are really driven by our clients' success. So if anybody wants to learn more, hit us up on LinkedIn or head over to catchlight.ai and fill out a form, and we'll get in touch.
Sounds good, Dan. Thank you for joining us. And to our audience, thank you for tuning in to another great episode of Banking on Growth. On behalf of all of us at Midwestern Securities and Banking on Growth, thank you for joining us, and we'll catch you on the next episode. Thank you.
This has been another insightful journey with Banking on Growth with Michael Graham and Midwestern Securities, a member of FINRA and SIPC. We appreciate your time. If you found value in today's discussion, consider subscribing for more thought-provoking discussions in the world of finance. Your support helps us continue to bring you quality insights. If you have a topic you'd like us to consider covering or have thoughts on one of our episodes, we'd love to hear it. Just email us at media@midwesternsecurities.com. Remember, the power to grow is within you. Thank you for being a part of the Midwestern Securities community. Until next time, stay inspired and keep banking on growth.